Well, thank you for having me. So we see this 4.5% growth partially because of the pent-up demand that was released in the first quarter from the last fourth quarter of last year. That explains why our retail grow by 10.6%, which is higher than expected, that of 7.5%. And we also see manufacturer department scored over 9% growth in the first quarter. So that's our domestic market speaking. Also, our international market is doing very well. First quarter trade had a strong positive sign and 8.4 growth year on year. So those are all the driving forces going in the economy.
So what do you make of the latest figures in a kind of defying this narrative saying that a possible deflation is rising in China? But let's face it, the spokesperson from the National Bureau of Statistics, make it very specific that the main challenge domestically is insufficient demand. So when liquidity rises, do you think this will be a challenge in the near future?
Well, we do need to give the market some time to regain confidence and consumption to recover. And as domestic travel resumes, demand would catch up and speed up circulation overall. So if you're trying to book travel and in hotel for the Labor Day holiday now, you will experience the opposite of deflation. But that's jokes aside, the inflation target this year is set to be 4%, meaning that more policies might be rolled out to stimulate consumption. So inflation overall would be about 3 to 4%.
Talking about consumption, what do you make of the latest CPI figure in the first quarter? 1.3% increase. Is that kind of mild? Is that in control?
Well, it is lower. It's the first time that's lower than 1% in over 12 months. And also a large deviation from the 2 to 3% optimal zone from past experience. And we also see the PPI dropped by 2.5%, which is exactly why it brings out the discussion in inflation. But we do have a lot of room in our policies. And so we might see the necessary monetary and fiscal policies to boost consumption and support labor market.
Now, help us understand more about the structure of China's foreign trade. We noticed that the total volume rose by 4.8% annually. But if you take a look at exports, it's 8.4%. But for imports, it's only 0.2%. What do you make of this sharp contrast?
We do see that the export is doing very well, and there are two reasons for that. One is that we have a more diverse trade partners, and the other one is that we're exporting more high-end, high value-added products. And for the import part, it's partially because the U.S.-China trade has declined for over 17%, which constitute a lot of the import part. But we are optimistic about the international trade as we see more foreign policies rolling out to seek more trade opportunities from emerging markets.
Now, talking about being optimistic, we know the Chinese government has set its target of GDP growth for this year at around 5%. So 4.5% for the first quarter. Would you say this is a good start?
Yes, it is a good start as we would expect. The service department, which travel is probably one of the main driver to further grow in the second quarter and the third quarter as summer comes by. And we would also expect both domestic and international policies to work together to ensure the full year target of 5%, which would include policies to support the labor market and small medium enterprises. Foreign policies would also help lower international political and financial risk and create more trade opportunities.